Hey guys, Saturday, November 8th, 2025. You know what time it is? It's time to visit uranium spot price, uranium futures, and also look at some of the equities and see where we're at. And looking at the month of November into the future to do our forecast. So without any further delay, let's get into it. So this is the Elliott wave theory. There's a lot of traders that use this system in theory, so I figure I included in this video for November. So far, as we can see here, we got a wave 4 in 2016. We got a wave 3, wave 4. That was that low that we got of March. And now we're working on a wave 5. And the wave 5 is projected at 136, pretty much testing the high that we made in 2007. Yep, 2007. Stokes are looking good. Let's see. There's a few things I wanted to show you. So, and I'm going to show you in the video where it's going to be interesting here. It could either be stalling here, could go sideways to lower here. The only reason why I'm saying that is because the my what I call my master chart is indicating that that could possibly play out. We don't know yet. We're just kind of figuring it out, looking into the future. But there's a high probability that we could kind of go sideways to lower here in this area right here. But what the Elliott wave theory is indicating, it doesn't know about sideways to lower, but it tells you projections. And according to the theory, this is our wave 5. And if it's going to go higher, we have a target of 209. So as long as you know 136 and 209, you're in good hands. Because that's pretty much what is forecasting. Using our extensions from these swing pivots that we have already made, you can see that you got the 61.8, which is a 108, which is going to be higher here than the 106 that we made-ish, and an extension of 100%, which hits the wave 5, which is 136. This is in the 61.8, and it goes onward. But it's interesting with the measured moves here that is landing on a wave 5, which is 100% of this move here. So there's something interesting to watch. But we're here. We have a long ways. We need to get to at least 106, close above this high, and then keep an eye on 108 and the 100 measured move, which is 136. Using our GAN square box, I've added this now in this new update. I'm getting it all the way from the low of 2001 and just kind of seeing how price move in this box. As you can see, we hit the midpoint, which is around 98-ish here. And we're kind of struggling in this angle right here. But we definitely want to regain and get to at least 98 to like 106. Let's see how it's going to play out there. And I think that's it. I don't have too much here because this is just pretty much, a counting system here. So let's go to the next clip. Okay, so this is one of my master charts. I have two. This is the one I call geometry, and then the next one is more cycles and forecasting. So this is more like structure, support, resistance. Let's look at our GAN fans. As you can see, this is where, let's see if I could just, let me use this one. This is where we kind of stall. We went as high as 106, but on the spot close, we stalled here at the 1x2. And we're kind of like here in between these two angles. We still below the 1x1. The ellipse technique, I would like to see it break above at least this arch and get out of the ellipse. So far, it's still in there. Using our GAN square, you can see that we're going to have support around 71-ish. So if it does go sideways to lower, this will be a good area of support. This is a little more fractal. This is from the high to the 2016 low. So you got 77. So your midpoint or center of gravity between these two swing points is 77 and 71. Those are two numbers you want to have alerts on futures. It'll be hard to do it on uranium spot, but if you could do it on the UX1 and put alerts there, then that could be an interesting area for you to maybe look at some stocks if they've pulled back or corrected enough where you want to devil or, you know, build a position. Same thing here with Fibonacci 71, showing you the key levels. 77, same thing. Nothing there. Let's see. Fibonacci, nothing there. Advanced support, 73. And Gann fan, you're still good here from this swing low because you're above the 1x1. So far that is still good. Nothing looks ugly there. You got 84 and you got 74. So pretty much we're kind of working on a wave 5, but you know, like I said, uranium spot, it's a dinosaur. It's slow. Let's look at our next clip and kind of see what the forecast is telling us. Okay, so this is my master chart for forecasting. And the first thing I want to do is show the spectrum cycle analysis. As you can see, we put some lows here, but the low came a little later. And now it hit some peaks. And we're somewhere on the blue one, or about to enter the blue one. We already hit the green one, and the green one pretty much gave us a spike higher. And now with the blue one, that's coming in now. And then these two are in sync while this one bottoms out pretty much in January, the red one. So I took all these three cycles and made a composite, made one, and this is the forecast. And I've been using this for a while, and so far it's been accurate here. It came in a little early here, and then the low came. Here it came in actually later. The low was somewhere around here. So it's not perfect. Always remember, none of this stuff is always perfect, but it gets you close enough where you could kind of like, okay, I'm expecting something to happen. Let me see what price action does. Because remember, price action is king. Whatever price action does, that's what you got to follow. But if you're getting a little hint or a glimpse of what maybe could be playing out, and you see price action doing that, then it gives you an edge, or at least gives you some conviction to be like, okay, what I got to lose? Let me just place my stop and see what happens. And that's what happened here when I got in and accumulated some uranium equities. And so far, this has played out well. But as you can see, sometimes thunderstorms come and hurricanes and earthquakes and volatility kicks in. So what it's forecasting now is that we're going to be entering maybe a phase here where it could either go sideways to lower, but it's not going to be like a crash, but it could be a little volatile. So if you don't like volatility, I don't like suggesting this, but if you can't sleep at night, you're always waking up in the middle of the night and looking and you know, you're losing sleep pretty much. You always, first thing you wake up, you don't even meditate or pray or read your Bible or do anything to, like, you know, improve yourself. You go straight into the charts and see where you at because you're kind of nervous. Maybe you want to lock in profits and then wait for this phase to end and then get in, or somewhere around April, around there, April, May, give yourself 3 months of wiggle room and then see if price action does that and then get in. That way around here, at least you can sleep like a baby. But if you can't sleep and you're anxious and you're nervous and you know, you don't want to lose what you got, that's not healthy. So in other words, get out of the market. I don't know how better I could say it. And then get in when things calm down. But we're going to enter a phase of volatility. I'm holding long personally. Because I know this is just going to be a correction phase, then to go higher into, I guess, into 2027, around there. And that's also factoring in, we're using probabilities. So we don't know if this is going to exactly play out to the T, but we're using high probability that maybe this could play out. So that's the forecast with the cycles. With the Bradley models is also indicating the same thing. We're here right now into October, and the Bradley model is just kind of showing sideways with key pivots and it's also indicating March. And then you get this, could be a rally or equities going higher into, you could say, May. Let's say March. That's like April. You could say May of 2027 if this plays out. It's all in conjunction with the spectrum cycle. And these are two separate things that don't relate to each other, but somehow they're correlating. So what you want to do is if you're not in it in the uranium sector, maybe wait around maybe March, April, May, and dip your toes, especially if the equities are selling off or in a corrected mode, and then accumulate there. Save some money and get in here while this goes higher. And maybe this could be our wave 5 in regards to the Elliott wave theory. Well, let's get these off here. Let's see. There's anything here of indicators. Andrew's pitchfork. If we zoom out here, maybe make it a little bigger. If I could do that. Yeah. The good thing is that we're holding this angle. As you can see, this is our midpoint. So that's good. Nothing here. You can see that's May of 2026. So that's going to be what is it? What I call a vector that will be coming up. We're getting out of the box here around September. Let's see. I don't really have that much here in this chart. This is more of the forecasting in the cycle. So just be ready for some high volatility. I'm going to be ending this video, and the next video I'll be uploading will be the equities. I'll be looking at some stocks, and I know some of you hit me up and wanted me to look at some stocks that I don't really cover here in regards to the uranium sector. I'll be looking at those because I promised it last time that I'll do it on the next video. So I'll leave you with that. But I wanted to reverse my update on my video because I normally start with the equities, but I wanted to show you now that, and I've been saying this because, you know, if you've been watching my videos, my thesis hasn't changed. We're heading higher, but we're entering a phase where now things are going to get a little interesting. More volatile. So it's going to shake the bears, it's going to shake the bulls, it's going to shake everybody off the tree. But if you stay focused and have a game plan, you could probably maneuver very well in this season that we're going to be entering. I'm going to sign out. Hope you like this video. I'll keep you posted on my thoughts on uranium spot price.